Good morning, everyone. How are we doing? Everything good? Well, here we are. Almost put in a new all-time high in the overnight again, but we failed to take out that weekly high that we had. Inventory is long, my friend, and it has corrected a bit. We had a decent inventory correction. So yesterday we had a liquidation, and that liquidating inventory was taken into wholesale hands, redistributed into retail hands for profit. Overnight inventory is long. It has corrected down to the close. But when we tag the close, wow, we found a bid and we're all the way right back up at yesterday's high again. So when markets behave like this, right? Hey Juan, what's going on? How you doing? When markets behave like this, when they bounce really, really strong after a liquidation, let's go and look at the nature of liquidation, right? And once again, let's look at it in a practical way so it's not all theory. When markets sell off, the first people who come in and buy the lows, we call them the smart money short sellers. Okay? Hey Terrence, how you doing? They come in and they buy first. Then wholesale buys a position on top of them because they see those orders come in and they start to bid and collect this inventory as it falls down. Then we come in, and then that big move up is created by the people who short here and add here. And when they go to cover, it pushes price up because all the inventory, all the cheap stuff is gone. So that is how liquidations work, and that's how we know how to trade them because we wait for the shorts to come in and bid. Then we buy and sell into that strength, which is caused by a lack of supply. Okay? The other thing for longer term traders is we have now done a look below and fail of 73.91. Target is 75.11, right? That's the theory. Now let's see if we just go back and forth, that's a possibility. Or we could liquidate, get underneath the overnight low, and come back and test the 73.91 again. If over the next few days we don't take out 73.91, you are going to get rotation up. And the reason for that is because it has to do with a trend. Okay? So if you look at this, we've had higher lows now. 1, 2, 3, 4, 5, 6. We had 6 days of higher lows. Market profile people call that one time framing higher. It's just less complicated to say we have higher lows. So it's trend up, right? Then what do? We break trend because we ran out of buying yesterday. Nobody wanted to buy it up here, right? And shorts were trapped under 74.21, not yesterday, the day before, right? No, smart money refers to smart money. Who use algos to improve the efficiency of their business. Okay? So smart money are like hedge funds. So if you were on the prop desk at Goldman, TBD, and they didn't make you a partner after a certain length of time, and you and a couple of buddies leave Goldman Sachs, and you take your PFO money, which is your please F off money they give you when you leave, and you start a hedge fund, and if you leave on good terms, they'll give you investors. That's smart money. Get it? So these pools of capital, small hedge funds, large hedge funds, they have traders who would have been shorting 2 days ago and came in and covered yesterday on that liquidation break. Algos don't operate by themselves in some sort of Battlestar Galactica kind of thing. Algos work for smart money. They're like robots that make the business more efficient, right? So what they do is they deliver the product, they trade in a much more efficient manner than human beings. Smarter, faster, self-learning, right? And unlike human being traders, you don't have to bail them out of jail at 3 o'clock in the morning for being drunk. So that's why, algos are just tools, right? So we get that liquidation break. Now that liquidation break does two things. The people who are long over 7406, those weak hands get shaken out, right, into those wholesale bids. The shorts come in and cover, wholesale buys on top. Now there's a position. You see this blue stuff? That's where 70% of yesterday's cost basis is. Do you see the blue stuff in the overnight? That's where 70% of the overnight cost basis is. So we've taken this and we've sold it up here. And when we put it on sale, we came right back to the top of the cost basis, stopped and moved back up again. Okay? So you take a product, you go and you sell it for profit, right? Then when nobody wants to buy it anymore, you put it on sale. And you usually bring it right back into cost basis. Now, if the sale is a deep discount sale, it'll come and take out that cost basis. And the only reason why it'll do that is because there's a lot of sellers competing and they're trying to capture the buying that's there. Right? But if they don't have to compete, they will raise price. And this is exactly what we're seeing here. Right? See a nice little liquidation. Overnight inventory was long. The point of control was up here. This liquidated down. Now the point of control is here. So this was distribution. Then we accumulated it, bought it all back again, took it right back up to sell it. Right? Make sense? Because it's a market, right, folks? Nothing too complicated about markets, right? And what we do as retail traders, and our objective is to find a way to take trades that work with the business, and so we can trade with the business instead of fighting it, right? So let's see. We're screwing around right here at that previous day high. If we open above 74.34, we're going to open on a gap. If we open underneath 74.34, we're going to open in the previous range of yesterday. Right? Exactly. If you can sell it at 10, why would you sell it at 9? Unless you have to. Right? Hey, Leslie, how are you doing? Where's that? That looks beautiful. Wow. Nice, beautiful, sunny day. Oh, Virginia Beach. Never been there. Beautiful. So now what's the signal? My friend Cloner is looking for a signal. right? I need to see if we open above yesterday's high or below. Market's kind of giving us a little bit. It's trying to tell us that there's some interesting business going on here. So let's watch and see what happens. You set up, oh, not looking for a signal? Okay. And Battlestar Galactica. It was interesting. I had a house that they used to film Battlestar Galactica, the TV show, in. I was almost putting a down payment on it when we had a massive windstorm and we had to move. Yeah, you know the big white house where that weird dude lived? It was in Lions Bay, BC. But it was unfortunately all windows, and when we lost power, oh my God, it was cold. Woo. So we had to go live in a hotel for a month. We ended up buying another house that was a little bit more down to earth, let's say. Yeah, in the old days, they used to do a lot of filming in Vancouver. No, not the original Battlestar Galactica, the TV show Jam. Well, I'm not that old. The modern one, right? You know the one, I don't know. I never watched the show, but they used the house for filming. Yeah, we were like 7 when the original one was out. So what are we going to do today? How are we going to trade this? Inventory is still kind of, well, it's actually, let's see, where's the close? Inventory is still long. I think it's going to be choppy, right? We're going to open up in a couple of minutes here. And let's see where the order flow takes us, right? So you can see that there's sellers here at 34 half, 35. Sellers up here. And there's some bids down here at 29, right? And like I was saying this morning, you don't need a DOM or any fancy software. All you need is a 1-minute candle chart. And you can really tell, like, check this out. Off we go. We're starting to open. You'll see that this area here is bid. There'll be bids here, right? If it breaks that, you're looking for 26 on the downside, right? We've got sellers at VWAP. They moved their sell from here to here to here. Now in the next 1 minute, see if they move their sell down under 31. Okay? Yeah, it really doesn't matter what we want as pill. We have to look and see what the order flow says, right? I think it's going to chop around for a bit, right? Yeah, exactly. Let's see if we can stay under VWAP and under 31 and a quarter, right? We're going to open inside that big move up from yesterday's M period. It's not really a price spike, kind of it is, right? But let's see if we respect the probe, right? Let's see what happens, right? You got 29 on the probe? Or are you using it versus the N high LC, or are you using it versus the L high on the price probe? Because if it's traditional price probe, it'd be here. Because that's when M took L in the last half hour, right? So that would be the price probe. So here we go, we're open. Broke through those 28 bids. And now we're going to come down to that overnight point of control area, which is here. Just relax. If the trade is not 100% clear, don't worry, right? Don't worry if the trade's not clear just yet, right? This is the little position before the open, right here, right? That's the position, right? See how we came right to the overnight point of control? Now, if you're looking for longs, I would wait until we get over 26. Or what would be a great long is if we look below 15 and come back up, right? That's where you're going to get the best deal, right? And there's the price probe level here at just under 20, 19 and 3/4. And the close, let the large traders plow the roads here, and let's see where we find the bid. What does that mean when you find the bid? You find the bid where the sellers stop selling and increase or raise price, right? So we're still looking, going hunting, right? There's that price probe area. There's the close. We're underneath it now, right? Now let's see if we can get back above the close, or if we come down and tag that stop at 16, right? So there's some decent size selling coming down, and the bids just disappear when that happens. So we're in the 2 times discount zone, right? Just relax. You're just starting trading for the day. Wait to find the bid, then we can work off of it, right? Now, when you see a green candle, a lot of people will jump in and buy. When I see a green candle, I want to see where they sell, right? See, the top of that candle is underneath 20 and 3/4. Yeah. Yeah, basically you're scoping out the market like a thief is scoping out a house, right? You're sitting in front of a house saying, okay, what time do they turn off the lights? When can we break in, right? Yeah, it could be the start of a big red candle. See that the seller is there at 20, right? That's why a lot of people just get sucked in and they buy that green candle, right? And they'll buy it. I want to see where they sell into it, right? So if I know the sellers are moving down, when it gets there, is it going to take that seller out and reclaim the close? Or the seller is going to step in again and push price under 15, right? If it's not clear, you don't have to take the trade. When you're starting out, and this is something I learned the hard way, you don't have to take the trade. You can sit and watch and wait a little while and make good observations. Where are the sellers? Where do they stop selling? Right now it's bid 16.5, right? We have 16.5, 16.75 bid. We've got sellers at 20. Now let's see what happens when the next candle opens. If the next candle opens and we get back over 21, that means the supply under 20 is done for now, right? So we're watching this candle, right? And if you're a scalper and say you buy 20, you know that there's going to be a seller at 23, right? So if you're not patient, you'll jump in and you'll buy, and you'll be looking for 23. I like to kind of wait, and sometimes you miss the trade, right? You sometimes miss the trade, and that's okay. I want to see where the bottom of this candle plays out versus these two, all right? So I'm happy to sit and wait. Point of control is starting to move up. They're paying more for it at higher prices. But we know that that's short covering off the open, right? We're right in the cost basis before the move up, right? Just chill out. Now let's see if we start getting our way over 21. Oh, not yet. See, aggressive seller. See that? The seller was here, now here, right? So make notes of this, and then you'll be able to actually look at this behavior, and you just might be able to predict the behavior. Because if the sellers are stepping in under a level you're watching, it means they're competing, which means you should not be going long just yet. Now, where do they stop selling, right? So say you shorted 20, put 21 as a stop. You know that you're going to be doing some covering here in the 17s, right? And here we come. Let's go tickle that 15 and a half. Come on now. Here we go. There's the look below. No fail yet. Give it some time. The seller's there at 15 and a half. Let them sell, right? Let them sell. Let them exhaust themselves. Let those orders complete before you decide to go long. If you were short off the 19s, this is a good place to take some profits. You are going to have some competition from buyers at 10. Okay? So we're dropping into that overnight low. Now let's see if we can crawl our way. See, there's a seller at 15, right? Yesterday's cost basis is here at 7. We've put the market back on sale all the way back down to the cost basis of yesterday's. Possibility of yesterday's low? Yeah, definitely. You know, in this market, anything is possible, right? Yesterday's low is a poor low. Fascinating, right? Short from 19 is a nice trade, LC, right? We definitely could see yesterday's low. Given this market, given how unpredictable it is, we definitely could. What I do is I use the stops to tell me the nature of the liquidation, right? So we got some bids here at 13, 12. Let's see if it continues. If I was short 19, 18, I'd definitely be doing some covering before the overnight low because I like to front run, right? If I know everyone's buying 10, I'll buy 11 just to get out of the trade, right? So I don't have to price compete. And we're dropping into that overnight low. Now, the trade that I like is the look below and fail of the overnight low. That is a nice trade. Let's see if we get that, right? So we'd be looking for a look below and fail of 10, which means we look underneath 10 and then we come up, back up over it. See, now it's teasing us. You see how they front ran it? That's why if I was short, I'd be buying before 10 to cover my short so you get good prices. Now let's see if they sell into it here at 14 or even lower, right? Nice and easy. We're just looking for the bid. Let's see if we can move the point of control down here. If not, we're going to crack that overnight low and come down and tickle that point of control down here. Okay? Still seeing bids at 11. They're teasing us now, right? Now, a lot of people will see it not taking out the overnight low and they'll jump in and they'll buy it. I used to do that all the time. I would go buy this and put my stop here. That trade maybe worked 3 times out of 10, maybe 2 times out of 10. Because what would happen is I would buy it and then I wouldn't have my sell orders out. It would go up, I'd hold it, and then boom, I'd get stopped out. So I've kind of learned to be a little bit more patient. Sorry about that. This crazy thing. Now the sellers are here, right? Just give it some time. Let's let the large traders work this out, right? Nice and easy. There's the overnight low. It looks below. And now we need it to come back up with some kind of a strength, right? So if you did buy that, you got to look to see, because they're going to be sellers, right? Give it a little time to reestablish the overnight low. If you got to pay a little bit more, it's okay. Nice short, Gem. Well done. Way to use the levels, right? So make sure that you sell your position into strength if you are long. So if you bought 10, you should be selling 13, right? You should be selling the 13s. If you bought 11, you should be selling, right? You got to be on the offer to make money, right? Doesn't matter if you own it cheap, right? But you got to sell, right? You got to book those profits. So you bought 11, I'm selling 14, 15, right? And that is the look below and fail of the overnight low. It's a beautiful trade, right? And you're done, right? You wait for the trade, right? You could take that with 5, 10 contracts. I bought 11, sold 13, 14. Thank you very much. I'm done. Yeah, 5 points. 5 points on one E-mini is what, $250, right? 3 contracts. That's not a bad trade, right? 5 points on one E-mini is $250, right? $750 for that trade. Even if you split that trade up in two and you do that trade once or twice a day, that's a $15,000 a month before expenses, right? You got to wait for your edge. Practice first you practice using the sim, then you practice using the micro. Then you move to the mini once you get proficient, right? There you found your bid. Pays the bills, my friends. It pays the bills, right? If you could make an extra $500 a day, what did Cisco say this morning? If you make $500 a day, what is that? It's not a bad living. I mean, it's not bad income, you know. It's 10 grand a month. And you're not killing yourself to do it, right? It's practical trading. And that's our goal at Trading Syndicate, is to get you profitable using practical trading strategies. And we're going to be doing a course on investing as well, right? Come check us out. It's only $19 a month. It's not going to kill you, right? And you will learn more on how to make money, right? No, I wasn't actually looking at the candles, Kevin, when I did the look below and fail. I was looking at the market profile. So what happened is, when the market came back up over, once I saw it clear that 10, right? I bought the 11s. I bought 11 and 12. And then I sold as soon as I was long. I put my sell orders out, right? On the look below and fail of the levels on the 1 minute chart, I'll use the candles more. But the look below and fail of the overnight low and the previous day low, those are sort of old time market profile trades, like from the 1980s. No problem. And the other thing that made me take that trade was the cost basis from yesterday is here. So we put the market on sale right back to where we bought it yesterday, stopped selling, ripped it up. Now let's see if we can hold the overnight low, right? Because we got all these people to buy, we suckered them in, now it's going to break the overnight low again. And if it breaks the overnight low, I'd be looking for the point of control, and then I'd be looking for 4.5, right? It's a two-sided market up here, which is not bad. It's good to see some selling at all-time highs. And what we're doing, folks, is we're in distribution, right? Remember I said how you end up going sideways, you move up, and then you go sideways to distribute this inventory up here, right? That's what we're doing. Now let's see, take out that overnight low. We'll be looking for 7.25. Once again, I missed the short, right? I missed the short of 14, 15.5 stop. I should have been concentrating on that. So after I took the trade, I stopped concentrating. And I missed that short. That was a nice short. Oh, you can't get them all. Sure, the purple is the point of control, Sticky. And the point of control is a fancy way of saying, where did I spend most of my money on inventory? So, Sticky, if you owned a car lot, right? And you had Toyotas and Bentleys and Mercedes and Lexus, right? The point of control is going to be where you spent the most, where you have most of your inventory is priced. Is it priced in cheap beater cars? Is it priced in really expensive Ferraris? Or is it priced in the middle? Get it? So market profile is a wonderful thing. Unfortunately, no one has ever made market profile practical. And that's what I'm trying to do. Because market profile talks about value and points of control and things like, single prints and poor highs, but they don't tell you how to use it in a practical way. And that's what we're trying to change here. We're trying to make market profile practical for the regular person who doesn't have 10 years to memorize terms and sit in front of the computer, right? So here we go. We got some nice liquidation coming in, right? So what's your next big target, right? Staying under 7,400, we target 73.91, and there is a stop down here from the J low, right? Nice, uncomplicated trading. That's what we want. Got some bids here. Let's see what happens. So if it breaks 94, we'll look for 8 times discount, right? So as our friend was saying on YouTube, could we see yesterday's low? We definitely could, right? If we get back over the overnight low, that'll be a little bit more difficult to get down there. But anything's possible in this market because we have massive, massive ranges, right? Big green candle, let's see where they sell into it. They sell into the 8s. little bit of seller there. Let's see. If these sellers see buyers, they will raise price up to 10 and a half, sorry. Right? So they will move their offer from here up to here and then up to here. It's okay, trade balance. If you're stopped out twice, take a step back. There's something you're missing, just relax and journal your trade, see where you went wrong, right? Happens to all of us, right? Some days you trade like a god, some days you trade like you got a bag over your head. It happens to me all the time. That's why when I first started trading for the day, I like to trade the micro. So if I lose any money, it's a small amount to see whether I'm in the flow. Also, trading at all-time highs off the open is a bit tricky until you really get a feel for the business, right? So don't worry. Now use that knowledge to learn. See, there's a seller at the overnight low. The problem with this market, especially short selling, is that at all-time highs and with multiple short positions underneath us, when the market sells off, it bids very quickly, right? Look how quickly we went from 73.99, 7,400 up to 10. 3 minutes, right? 3 candles, boom, right? So you really, really want to trade at an edge. And waiting for an edge is difficult. It's not easy. Right? But if you know why you're waiting, if you know why you're being patient, it's a lot easier to be patient if you understand why. Because we use these blanket statements in trading and people don't know what the hell we're talking about. So they have a hard time doing it and applying it, right? Couldn't get down and print those 91s into the 94s, Jam. Let's see if we get back up over the overnight low. We'll be looking for like 12 and a half, 13. I'd let the large traders work out that 74.10. There's still a seller there. They're not crazy aggressive, but they're selling the 10s. So had you been long 6 or 7 or 8, you'd want to get out at 10. Yeah, good point, Steve. Hmm. Creeping back over that overnight low. Now another thing is I've kind of made my daily limit for the day. Well, not limit. So if I'm going to trade some more right now, I'll just trade the micro, right? So let's see if we hold these 10, 11s and 12s. And if you're buying those, You'll want to probably get out around 15. So I'm long 13, out 15. Quick in and out, 3 micro. Once again, look below and fill of the overnight low. I was high. I should have been long 11, but I got distracted. I didn't get in till 13. Discipline, not the greatest. This week, my discipline has not been good. You know, um, and to speak to that, you know, Jam, was saying he's not feeling well. I just sort of got my voice back. I still sound a little weird, but my voice is much better than it was 4 weeks ago. At least doesn't sound like I got marbles in my mouth. So very pleased about that. But the girlfriend's moving to a new job, so stress, stress, stress. Look above and fill of 15.5. Rotation back down. If you're short 14, go put some bids in at 10. That's going to be the overnight low. There'll be a little bit of buying here. Boom, there you go. You're covered. If you're still short, down in the eights. Right here. There you go. Short 14, stop 15.5, cover 10, cover 8. Nice trades in and out with the business. What's my daily limit? Well, I trade a couple of accounts. I trade my own. In my own, I'm not, I'm not a big shooter. 500, 1,000 a day. If I'm trading for a client, it's a bit more than that. I trade for income, and I'm a big believer of making a little money and stopping. But that's just me because I've got a bunch of other things to do. I've got some consulting work I'm doing for companies. I do teaching. I have different revenue streams, so I don't count on trading just for all my income. And I find that works for me because it takes the pressure off me. And sometimes trading is sometimes like some weeks I'll trade like crap, because I'm a human being. Or, in April I was sick like hell. I couldn't trade at all. So you make money doing other things. Yeah, it sounded like I had cotton balls in my mouth. It was brutal the last 4 weeks. I had an infection that attacked my throat. In fact, I thought I had a stroke. I went and got checked out to see if I had a stroke. So it was a pretty stressful time. Back over the overnight low again. Now, if we collect all that liquidating inventory from yesterday's end of day and the overnight, and we get back over 15.5, right? Your targets are going to be 19, 20, and 23. Those are going to be your upper targets if we accept back over 15.5. Right? Yeah, so I trade for income. I don't trade for glory. If I want to make millions of dollars, I'll do a deal. It's a lot easier. Do a deal, you get a bunch of free stock and you sell it, right? Um, I really, at this time in my life, to go and make 40, 50 grand a day, I don't think I have the health to do it right now. Quite honestly, I'll be very honest with you. I can grind out a living and I'm doing okay, but I don't think I can do the 40, 50, $100,000 days. I I don't have the physical stamina for that right now, and just to do that, right? 20, 30 years ago, no problem. But 20, 30 years ago, I didn't know anything about retail trading. So I had the stamina, but I didn't have the knowledge, right? And the business I was doing is completely different. So we just looked above 15 and a half. Let's see if we stick above it. And if we do, then your next target is up here at just under 20. Then the 20s are going to be your next target. Still sellers at 16. That's okay. I'd be curious to see if we can take this and go down and print the 10s again. That's going to tell me a lot. Okay, there we're back over 15. You're looking for sellers right here, just at 19. See, doesn't it help to know where the sellers are going to be? So if you're long, you can sell before you hit that level, right? Yeah, so much for sell in May and go away. Now it's like bid in May and trap the shorts. Little chop here, right? A little bit of chop. Hey man, it's good. You're clawing your way there, Symphony. Just try and make money, a little bit of money every day. It doesn't matter. It doesn't have to be a lot, right? You don't have to be Rockefeller, right? That's $7. It's meaningful because you followed your business plan, right? Don't worry, that'll increase over time. Don't get disturbed, celebrate that, you know. It won't be long before that $7 turns into 700, right? Just keep doing what you're doing, my friend. And profit is profit. Now, NQ is, oh, it's kind of normal, TBD. NQ is a very thin market. So it moves, a little bit of size moves NQ quite a bit. Now, you don't know what a thin market is, so that means there's not as many participants. And large players can move the market very quickly. And if you have unreliable or choppy order flow, it's like being out in the sea. It's getting banged around. Yeah, Symphony, what that entering a trade too early, that is one of the biggest problems I always have. The trades I take, right? When I do the look below and fail trade, this might help you. The trades that really work for me are the ones where I feel like I'm taking the trade a bit late. It feels like I'm late to the party. Because I too always jump the gun, get in, get stopped out, and then the trade works, right? So I know exactly what you're talking about. Try that. Try going in a little late, right? And the really good trades for me, they feel like you're late. And when you feel like you're late, it means you've let the large traders work out the path before you, right? Especially when markets are choppy. Now, can we take out that 19 seller? Not just yet. Let's see. See how it's chopping up and down? It's because the order flow is not constant. Yeah. Give that a shot. Try that, right? Yeah, you should definitely size down. Go and put those trades. And if you have any questions, you can DM me anytime, right? Definitely size down, right? After a big loss, right? It happens, right? It happens, right? What we want to do is we want to lower the frequency of that happening so we preserve capital, right? Yeah, maybe a look above in favor of 14.5 would be a good short. But I see the offer kind of moving up. Right here, it's a little choppy for me. So I'll kind of chill out. If we get under 14.5, right, you want to sell the 14s, put your stop at 15.5, and then bid these areas, right? But if the market's chopping around at a level like this, I would just let it go for a bit, right? Wait for the next candle. Let's see what this next candle does. Can you see that there are bids at 14, at 15, 74.15? You can clearly see the market's bid there, right? Boom, boom, boom. So those bids have to drop for you to short. 5 seconds till the next candle. See, the next candle's about 15.5. We need it to come down, right? We need those bids to scare away. Here we go, here we go. We're filling them. But you see the response when you fill those bids, right? See how it's chopping around that 74.15.5? This for me means take a break, right? Now, because I'm in the UK, it's 10 after 3 here. And I've been trading, I've been up since 5 in the morning. So as the day progresses, I trade less because I know my mental facilities are not as good as earlier in the morning, as off the open. You start losing concentration. And as soon as you start breaking concentration, right, you start making mistakes. And that's how a lot of people, they'll make good money in the morning and give it all back in the afternoon, right? Sound familiar? Right? Because they keep trading when they should just chill out, right? Something to consider, right? Now, I know a lot of people are like, oh, if you have an edge, you should push your edge and yada, yada, yada. But do you have the stamina to push your edge? Are you real, like, the other thing is, I'm cheap, right? So if I make $1,000 and I lose 100, if I lose 10% of what I've made that day, I stop. Some people they have a 20%. If you lose 20% of, if you make 1,000, you lose 200, they stop. Right? I know that I'm going to be here tomorrow and the next day and the next day and the next day, and the trades will always be there, right? So if I'm down, if I lose 10%, 15%, I'm done. Because as human beings, we will have the desire to try and make that money back. And when you get desperate to make that money back, that's when you start making bad decisions. That's when you start ignoring your business plan. That's when you start ignoring your risk, right? So make your money and stop, right? They say, a lot of people will say, well, if you were working at SMB Capital or if you were working at this prop firm, they would give you crap for stopping. But here's the thing, folks, you're not. You're trading with your own money or you're trading a funded account. You don't have the support. Now, say you're shorting under 15 and a half, right? There's still sticky bids down there at 14, right? So you're not trading at a prop firm. You're not trading at a brokerage firm. You don't have the institutional support of those firms and the capital that they give you and the problem solving abilities. You're sitting by yourself. So a lot of people, will say, oh, you got to push your edge. Well, have you defined your edge in a professional manner that you can be aware of when to push it and when not to push it? Just because you made a little bit of money doesn't mean you should push it and try and make more. Unless there's a valid business reason, unless you have the wherewithal to take the trade and be present, right? That short, I don't know. If you were short 14, you didn't really make much there. You're back up over 15 and a half Symphony. Remember how I said if it's chopping around a region, I would leave it alone, right? Because what we're doing here is we're distributing what we bought here up here. And if we hold price steady, then your short's not going to work. You see what I'm talking about? Right? It might work for one candle, but now this is when the people who shorted here realize that they're trapped and they go to cover and the sellers raise price. Yeah, so, you can't trade like you're sitting at a prop firm when you're sitting at home alone. That's completely ludicrous, right? Because you don't have you don't have the support group, right? Yeah, stability brings buyers. Just like if people see price being stable, they'll come and bid. Just like people will, when they see a lineup, they go and stand in line, right? People see a lineup and they automatically go and stand in line. What's the lineup for? I don't know, but it's got to be good, right? It's just human nature, right? I don't like to trade tight, choppy ranges. I call that a pickpocket market because if you don't get your timing just right, you're going to end up just burning cash, right? Wait for a clear edge. There's no stability in a downtrend symphony. That doesn't make sense. A market will downtrend and then go sideways. And that will sometimes bring buyers. But in the trend itself, it's not going to bring buyers. It's going to panic people out. So what you should have said is, at the end of a downtrend, if you get stability, that will bring buyers. Right? Make your money, take your money. I'm also a big believer is, say you make $1,000 in a week. Get it the hell out of your brokerage account. You should be wiring money out of your brokerage account every week, every 2 weeks, and paying yourself. Never try and grow your brokerage account because you don't have the skill to do it, and that's how people lose all the money they've made. So if you make $500 or $1,000 in a week, wire it out. Brokerage accounts are meant to wire money out of, not into. You're not supposed to be funding your account every 3 weeks, right? You do your initial funding, and once you get consistent and profitable, get that wire every Thursday, every Friday, get the money out of the account before your ego can get its hands on it, right? I've never seen anybody grow an account, right, who is a rank amateur trader. It doesn't happen, right? The other thing about that is that you pay yourself, right? You get used to getting paid. Retail traders aren't used to getting paid. They're used to losing and blowing up accounts. Once you get in the habit of getting paid, it's going to do something else. It's going to keep you from making stupid decisions that's going to screw up your Friday paycheck. So if you make money, a little bit of money every week, and you're used to getting that wire, you're not going to do anything to screw it up, right? Growing accounts, sizing up, holding trades longer, these are all skill-based things that you need to develop over time. It's not going to happen after 2 weeks of profitability, right? And that's where the patience has to come in, you know? Don't worry, you'll get there. And if you're going long up here, realize that there's a seller here, right? That seller at VWAP is down here now, right? Pretty obvious. So if you're buying this distribution, you know that they're selling here. Now we're coming back into this little distribution cost basis, and you'll be looking for 15.5, right? Once again, it's really choppy, right? Really choppy. Time to go for a walk, have a coffee, relax, you know? You hit the 20s? Yeah. Put some bids down here, Matt, at 17, 16, and see if you can get a cover. If you can't get filled on the bid, take the offer. Right there, you should be able to get a 16.5, 16 quarter fill. Nice. Perfect. Couple of those a day, it's all you need. Right? Simple life. Right? And that's what we strive at the Trading Syndicate. Our job is to try and help you make intelligent, common sense decisions that are based on the business. We keep you from trading when you're not supposed to. We teach you when to trade and when to take that business risk, right? Very important, right? It's really, really important. An A-plus trading setup is a clear business opportunity where you can manage your risk. Think about that. We will teach you how to do that in a practical way, right? And it starts by trading at an edge. When you trade from an edge, what you're doing is when you trade from an edge, you're waiting for the best deal, the best discount, right? And now there's a bit of a choppy mess. Didn't take out 15.5. So we're going to go creep ourselves back up to the 20s. You know, if you're long 16, 17, get your sell orders out, sell the 19s. We always want to sell before everybody else is going to sell. And we always want to buy once the bid has been established. And that's hard, waiting for the bid to be established, because you always feel like you're missing out, right? That'll come in time, Matt. That's good. And that's good self-awareness, you know. Now if we take out those 22s, we're looking for that seller at VWAP at 23 and change. Now once again, something to look forward to in the afternoon, okay? I'll tell you guys this as the day moves on. If enough people get short underneath VWAP, underneath 23, and the liquidating inventory is absorbed, we're going to take this and we're going to try and sell it in the 30s up here. So watch out for that, okay? Because you also have to remember that we are really not that far away from all-time highs, right? We clipped the all-time high in the overnight, right? But we're not that far away from it, right? So be careful. If we take out yesterday's high, you'll be looking for the overnight high, okay? If you take out that overnight high going into the end of the day, be careful shorting because there's no supply overhead. See how we're trying to clip VWAP here? See that? It's already starting, right? If we hold over VWAP, it means the shorts who are short here, they're going to come in and cover. And that's why you get those big green candles, right? Keep that in mind so you don't get trapped. That's exactly it, Kevin, right? We're not above VWAP, but now we are, right? Just as you said it, right? Right, so that's the position. We're going to go to sell that position. If we sell and go sideways, it's going to bring more buyers. So be careful, right? And this is the problem with position shorting a market at all-time highs. You have to hit and run, right? You have to hit and run. You can't be stubborn shorting a market at all-time highs. We saw this after COVID. We saw it after last year in May when the market just got decimated. Remember, we had a 1,000-point day, you know? Be careful, my friends. There we go. Told you. Right? Back above VWAP. There's definitely shorts trapped under that poor low from yesterday. Now, if we take out the A high, right? We've got a poor high right now. Let's see what happens. If we take out that A high, it's going to trigger some short covering. Your target will be the previous day high. See how they're selling into it here? That's normal, right? Double top. There's the short run. There's the short covering. Told you. That's a stop run. Let's see how much continuation it has above 29, right? So do you see we had 6 green candles in a row right after I told you guys that they're going to trap everyone short under 23, and now they're going to rail it and sell it in the 30s. So where the position is down here, right? It's all down here. They're taking all this cheap stuff. They're going to sell it up here, right? It does feel good getting better at something. You're developing a skill. And you started at 11 years old and you're 20 now. Damn, Symphony, you're going to be retired by the time you're 30 years old. Hey, so just remember me when you start your own hedge fund. I want a job. Okay? Good question, Steve. Good stuff. A lot of guys I trained have their own funds now. You know, you don't have to have a hedge fund. You can just trade for income, but a little look above and fail of 31 and a quarter. Let's see where they bid the thing. Does anybody have any questions? It's good stuff, Symphony Trades. Good to hear. Well done. I wish I started trading when I was 11. I definitely did not have the maturity to be a trader when I was 11 years old. Good for you, man. Really cool. Yeah, I don't know if we're going to get singles, LC. Maybe. You only got 2 minutes to get singles. No questions? That's been a good day. It's been a good day. No, you can run the fund. I'll just be an advisor. I'm too old to be the boss now. I'll just sit on the trade desk and train your traders. Screens are in fact green. Yeah, all the PhDs, unfortunately, there's nothing wrong with PhDs in mathematics, and they do have their place. But for simple retail traders, you don't have to go that deep. All you need is a viable business plan and the ability to manage risk and the ability to have the discipline to keep repeating the same business practice over and over and over again and knowing when to trade and when not to trade. It's not crazy. It's not really complex. Trading is very simple. They try and make it overly complex so they can take your money because they confuse you, right? But trading is simple. What it's not is it's not easy, right? It's a grind. It's having the discipline to have good business habits every day, even when you're not making money, not to get desperate, right? I'm doing better, Symphony. Thank you. I've almost got my voice back. Almost got my voice back. Still a little rough, but hey, could be worse, right? Could be worse. I want to thank you all for being with me today. I really appreciate you guys. Have a wonderful, wonderful trading day. Be safe out there. Don't take candy from strange market makers. And we will see you bright and early tomorrow morning at 7:45 UK time, which is 15 minutes before the London Open, which is 2:45 a.m. New York time. And eventually I'll start doing longer sessions again as soon as I get my voice back. I just don't want to screw it up again because the way I sounded 3-4 weeks ago was brutal. So thank you guys. Have a wonderful day. Come visit us at Trading Syndicate, and I look forward to seeing you tomorrow. Thanks so much. Have a wonderful day. Bye for now.